Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin. We are looking at Tesla once again, and welcome back. It's been a while. We're looking at Tesla, and one of the things, based on the most recent video that I've made, which is, again, I stepped away for October because I was very busy. If we look at what we've seen, though, is a complete deterioration in the overall market. Tesla is one of those stocks that can lead us to the upside or to the downside, and the overall market will follow. So if we look here, yes, we have a 1 day of 1.76%, not a big deal. Over the 5 days, though, we're down 7.24%. Over 15 days, we're down 23.8%. And over 20 days, we're down 18.5%. And 3 months, down 20%. That's significant. That's the type of thing that will completely change the complexion of not only Tesla, but the overall market. Something to coincide with that is that if you look down here, we see macro season. We hit a bear market and it flipped on the 27th of October. That is the first time that that's flipped. If you wanted to understand how we kind of figure that out, you can go ahead and subscribe to the New High newsletter. We kind of called that out to our subscribers just on Sunday this week. But if we look at the overall data here for Tesla, something that's really curious to me and something that's quite concerning is that if we look at the actual day where we would want to respect it as a signal, I would say it'd be back here. It would have been on the 9th. And the reason why it would have been on the 9th, and I'll explain, is because we just flipped 1 month negative. We were already bearish in the longer term over here. I don't think that I would have necessarily paid attention to this because you did get a move up. Granted, you got a move where the price ended up, it was up above its 5-day moving average and the 23-day moving average, and it was actually in a very good position. But if we scroll over and we look here, the type of things that we were seeing wasn't, it was essentially just like nothingness. And what that is in hindsight is nothingness for Tesla is a big deal. This stock is incredibly polarizing. People love it or they hate it, but they have an opinion. And at the very beginning of October, the very end of November, essentially we had lost an opinion. We hit a high here in July, we hit a bottom here in August, and then from this period here until we were getting this move in the middle of October, we really have had no opinion. We got a little drift higher, we got a little fall, little drift, little fall. We hit what I imagine is some sort of catalyst with like earnings, and things collapsed. Here on the 19th, we had 170 million shares traded. That day, we ended up breaking below our 5-day moving average and 23-day moving average. We already saw essentially price to fall was in the price future path. We saw volatility rising. We've had an explosion of volatility very recently. We essentially had go short on the short term, intermediate term, and longer term. We saw bearishness on the trend indicators for short term, intermediate, and longer term. We got short term bearishness in Tesla, which is continuing. We've had falling bear. We've got essentially all the way down to this blue iceberg color in terms of the momentum. That means we are down to in the high 30s or low 40% of bullishness in the stock, which if you know anything about the individual stock market, the market wants to go up. It goes up 66% of the time. So for you to get down to high 30% of bullishness, that is incredibly negative. That is a catalyst and or market movement. It's just conditions providing you the opportunity to fall as opposed to rise, which is the natural condition of the market. We do see that we have a coming rising bull potentially, so we want to be positive. And if we see any developments off this 200 level, 200 has been one of those prices where you really wanted to respect it. It was resistance before. It was resistance before. It hasn't been support yet. We'll find out if we can use this as support and go back higher. We could hit 225, 250. I'm not sure. But like the overall sentiment, we can see we're still below the 15-day moving average, which is that black line there. We're still nowhere near the 50%, which you at least need to cross to be truly bullish, but you'd like to see it rising. But look at the volume, nothing significant in terms of the price moving. We don't even really see breakouts in volume as we see the price falling, which again, you just see kind of apathy. The only place you don't see apathy is right here in the volatility, where you can see the price is continuing to rise. And on the bottom, the correlation of price is going incredibly negative. So you know what happens when you have two negatives? That makes a negative, right? Because they're going away from each other. They're going away from each other with so much force. You are seeing essentially the lines, like the red lines are days of volatility. You see how much difference or gap is between these lines from it going from 17 to the previous day's 15 to 14 to 13 to 12. You see how the numbers were closer together before, now they're getting more spaced out. And the negativity and the correlation is essentially like, how negative is this? It's 74% and it's diving. Only a couple of days ago it was at negative 25%. Now it's at negative 75%. That is a ridiculous increase in a short period of time in terms of the negativity of the correlation to the price. You can see that we have a big breakout here in the trade range. The top of the trade range is 297. What I want to call attention to as well is that on the weekly, the top of the trade range is also 297. So you do have a very important number around that 300 level, which that's the price that we were expecting that we were going to break this summer for Tesla. That would have reclaimed the $1 trillion mark. That did not happen. But look at the bottom of the range, you have 279, but on the weekly, we're at the bottom of the range. So I'm very curious because being at the bottom of the range on the weekly at 202, based off of Friday, does tell me that we're going to see some sort of change in this. Now, this trade range hasn't really moved since we've seen these gigantic breakouts in May. That really drove the range through most of the summer because we went sideways, but the range continued to try to catch up based off of this gigantic move from May into the middle of July. So now that we're at the very bottom, we should expect to see some sort of either bounce or at least some sort of reaction. We would expect potentially to get a bounce up to that 250, 225 level if we hold 200. If we look at the ultra fast sentiment, things don't look that great, so we'll just want to wait and see. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, subscribe to the New High newsletter. We give you 25 stocks to your inbox every single Sunday, stocks that are breaking out to one-year highs, all-time highs, stocks between $5 and $20 that are breaking out. We really give you a great overview of the market to get your trading week started. Talk to you soon. Have a great day.